A client of mine has to replace the roof of her house because it got nearly destroyed by a storm, and the homeowners association rep in her community drove by, and soon after my client received a greeting, aka violation notice, in the mail, basically saying, we notice your roof is ugly looking, so you need to replace it, and here is your deadline. In the meantime, she has been saving every month towards a down payment for her first investment rental property because she wants to start generating passive income and doesn't wish to compromise the predetermined monthly amount of money that she pays to herself for investing to now pay cash for the roof replacement. So she went to the bank and asked for a loan. Her bank suggested two options, a short-term and a long-term loan, and she's been debating which one to choose. We all know the short-term loan means a larger monthly obligation and the long-term loan means a smaller monthly obligation to the bank, but by the end of the term, you usually end up paying more in interest with the long-term loan. This is one reason for some people not to be in favor of the long-term loan. But let me ask you this. In case of an unexpected, urgent, or emergent expense, would you rather have a larger or a smaller monthly obligation to your bank? To me, this has always been the number one question, regardless of how many emergency accounts I hold. Here is the important part, and that's what I told my client too. It doesn't matter which loan you take, as long as you realize it's your responsibility to pay it off as quickly as possible, because interest, regardless of how big or small, coming out of your pocket and going into the bank's pocket, it's not in your best interest. No pun intended, okay? We are currently talking debt that brings no income to your bank account. When we had a similar roof situation 7 years ago, we were not financially independent yet. I was still working on building the rental real estate and options trading portfolios, and my boyfriend would occasionally opt to wait a month or so between traveling nursing contracts while looking for better opportunities. We chose a longer term loan as available at the time. It is important to know how to create a favorable situation that aligns with your financial goals when choosing a loan strategy. On paper, a long-term loan means a smaller monthly obligation for you should you have one of your income streams temporarily interrupted, or you have an emergency or another pressing financial need like a car repair that you absolutely must cater to if you want to keep working or running your business and producing income. Also keep in mind that when you take a new several $1,000 loan for a repair like this, your credit score dips a little bit until you start paying this obligation off on a regular basis or you pay it in full. We never use the entire term when paying off our loans. We never pay the minimum monthly amount either. We would pay the minimum monthly amount required by the bank only if there is another financial priority, but we always scale our loans way ahead of time. Just so you can get an idea, our roof loan was a 3-year loan and we paid it off in 7 months. My nursing school loan was a 15-year loan and I paid it off in less than 4.5 years. Our 30-year house loan was paid off in 5.5 years. I know how much I will be putting monthly towards a loan payment before I even apply for a loan that is not related to a cash flowing asset. It should never be just the minimal amount, regardless of whether we're talking a long-term or a short-term loan. But you must have a long-term financial plan. 5 to 10 years from now, at the very least. You've got to stick to that plan without compromises. And then you'll be able to adapt and tweak things just as needed if anything unexpected occurs, as it always does. You should plan for these things, they never come invited, and you still have to prompt adjust because the responsibility is ultimately yours. This financial flexibility stretches your imagination and helps you become more resourceful and creative with your finances. So a long-term loan isn't a bad thing if you clearly understand when to take advantage of a smaller monthly financial obligation and when not to do so. I hope this helps, and I'll see you next time.